Will you fix rates? Do I stay variable and watch the space? Like, what does that look like?
There's anxiety in the air as home loan repayments soar. Customers of this mortgage broker are looking at ways to cut costs.
They're putting their expenses on the spreadsheet. Some of them are saying that, Sashi, I cannot have a healthy meal because healthy meal costs a lot of money. I have to pay my mortgage first.
Those not forced to cut back on the essentials are still reassessing their spending.
Instead of just being more relaxed, with your budget, suddenly you're watching for where you can actually be adding more into your home loan.
The Reserve Bank has delivered another 0.25 percentage point increase to take the cash rate to 3.35%. RBA Governor Philip Lowe acknowledged that some households have substantial savings buffers, while others are experiencing a painful squeeze on their budgets. The Treasurer says the cost of living is unacceptably high.
It will hang around for longer than we'd like, but there is growing evidence that inflation is expected to have peaked in our economy.
If lenders pass on this rate hike in full, homeowners with a $750,000 mortgage and 25 years left on the loan will see their repayments rise by $114 a month, which means they're now paying $1,362 more than they were before the RBA started increasing rates last May.
I'm watching it with great anxiety, to be honest, because it's the unknown and you don't know whether it's going to keep on escalating.
Philip Lowe's statement will be little comfort to those hoping for a reprieve. He said the board expects further increases in interest rates will be needed over the months ahead to ensure high inflation is only temporary.
We've penciled in now 2 25 basis point rate hikes at the next 2 board meetings, which would take the cash rate to 3.85%. There's a massive amount of tightening now coming in the pipeline for households, and home borrowers are basically going to do it tough as we go through 2023.
In Brisbane, Phil Allen rolled off a fixed rate of below 3% at the end of last year and was ready to refinance with a different bank rather than pay more than 6%.
I think we all know that banking loyalty doesn't tend to reward customers in most circumstances.
But his existing lender decided to show some loyalty, beating the new deal, including a cashback offer, if he stayed for at least 6 months.
To me, it was really surprising. I hadn't expected them to really even match the rate that I was moving across to, let alone better it.
The banks are competing super hard for refinance business. So if you've been in your house for 4 or 5 years, you've got equity of 40%, use it to get a much better rate.
So that'll make it 556, correct?
Yep. Sashi Sen says it doesn't take much to lure borrowers at the moment.
If they even get 0.01 cheaper, they are moving. They're not staying with the current banks.
That's if you're lucky enough to be able to refinance.